Approximately 1.2 million Canadian mortgages are set to renew in 2025, according to the Canada Mortgage and Housing Corporation, most of them at higher rates. Mark Ting, whose own mortgage is up for renewal, joins us now to talk about what's driving interest rates and whether he'll be choosing a fixed or variable option. Mark is our guide for personal finance and a partner at Foundation Wealth. Hi, Mark.
Hi.
So with rates jumping around lately, what's driving all this volatility in the mortgage market?
Nowadays, it seems like all roads lead to Trump. So the interest rate environment is no exception. So what we're seeing now is we had Trump come in and he basically said one of the biggest things, one of his first goals was to lower interest rates. He was very vocal about it. But the thing is, he doesn't control interest rates. It's not like he can sign an executive order and they'll come down. He can enact policies to help that. But ultimately, mortgages, the bond market, which sort of is controls fixed rate mortgages, that is controlled by market participants. So retail people like you and I, hedge funds, pension funds, that sort of thing. And then on the short-term rates is central bankers. So Jerome Powell in the States. So what's happening right now is these participants are looking at policies, mostly the tariff policies, and they're trying to figure out, will this lead to more inflation, less inflation, deflation? And that's where all the volatility is coming from.
Okay, so where are you leaning on the inflation versus deflation debate?
So I'm a contrarian. So I'm in the minority. So I'll put that straight out. Most people will say that tariffs are very inflationary. And it kind of makes sense. Like if we buy products and all of a sudden there's a 25% tariff on it, that's going to be passed on and prices are going to go up. But I see things a little bit differently. So for one thing, I think that tariffs will ultimately go down because when this happened before, we did see a bump in inflation and then gradually they came down. And another thing about it is we look at what causes inflation and we look at CPI reports, which is the Consumer Price Index. And we just had that and it came out at like 3-something%. And that people were pointing to that and saying, well, this was pre-tariffs because it's always backwards looking. And if it was 3%, and then when the tariffs come on, it's only going to go higher. So that means inflation is going to go higher. And that means that's bad for the bond market, which means it's bad for people getting mortgages because mortgage rates could be going higher. Now, I look at inflation as well, but I don't look at the CPI because to me, that's old news. It's old information. There's something called the trueflation number, which has similar variables, but it is basically live. So it's what's actually happening today. And that's much lower. It's like 1.4%, which is very much lower than sort of the norm of being under 2 to 3%. So I see inflation actually coming down despite the tariffs. And the reason for that is, well, people are sort of ceasing activities, economic activities. Like if you don't know where the goalposts are, how do you plan? Like your own family finances or businesses are the same way, governments are the same way. So they generally put pause on economic activity. So that's a slowdown right there. And then, of course, we are seeing other things coming down in price. We're seeing housing coming down in price. Rents are coming down. Energy prices have come are off by quite a bit. It's almost like nothing helps with inflation like a slowdown in the economy. So I think that the world is going to be a little bit surprised, like the consensus, and we're going to see much lower inflation, which could be good.
Rents and house prices are coming down across the board or in Vancouver?
Yeah, across the board. Rents have come down quite a bit in Vancouver, like double digits.
Really? Okay.
Yeah.
And so help me connect the dots then. What does that have, all that information, what does that tell you about variable mortgages versus fixed mortgages?
Okay, so variable mortgages are based on the short-term central bank's decision. Trump has said about Jerome Powell, you're a terrible central banker. Basically said you should be fired because Jerome Powell decided not to drop rates, and Trump really wants him to not. He's drop rates. Now Trump has walked that back and said he's not going to be fired and sort of calm people down. But ultimately, if you think that the economy is slowing down, it's going to struggle because of tariffs or for any other reason, then what will happen is the central bankers will come in and they'll lower interest rates because that's a stimulus, and that means that will help essentially our economy. So that will help economic activity. So if you get a variable mortgage rate, and every time it goes down, you benefit from that. Your payment may stay the same, but the amount that goes towards interest is lower and the amount that goes towards principal is more. On the fixed rate, it's all about the bond markets. So we've had a weird dichotomy where interest rates have gone down in Canada because we've been cutting interest rates since last year, but our bond prices, like the 5-year, have gone up. And usually that doesn't happen. That's often happens when there's sort of a confidence issue where the world doesn't see Canada, if I'm talking about Canada, as a good place to do business. And that's what happened in the States because interest rates on the long term, the bonds were coming down as per what Trump wanted. But when he started sort of fumbling and causing the debacle, that's what I'll call it, of Liberation Day, then the world sort of lost confidence and that's why we saw bond prices go up. So all that to say, if you have a mortgage, you want bond yields to come down because when you renew it, you're going to get it at a better rate.
Okay, so variable?
For me? Okay,
you?
so this is what I say to people when they
And
ask
I'll
that.
say we just have about 30 seconds or
Okay,
so.
I'll be very quick. I'm probably going to go for variable as it stands now. My mortgage isn't due for another 3 months, and I think a lot can happen from there. So my advice to people is don't just follow what I do. Get a really good mortgage broker and basically go through all the scenarios because it's not just about rate. It's about all the flexibilities that are involved with it. So the way I'm playing it, likely, is I'm going to do a shorter term variable rate, but I'm going to be watching the bond market. I'm going to be watching the fixed rate market. And if that starts going down to under 3, I might lock in. The other thing that I might do, which people don't often realize, is you can do both. I can have $1 million house. I can have a $600,000 mortgage. It doesn't mean I have to do one or the other. I could do half variable, half fixed. Mortgage brokers usually don't tell you that because it's more work for them.
That's really helpful advice. Thanks, Mark.
Thank you.
Mark Ting is our guide to personal finance and a partner at Foundation Wealth. He joins us every week at this time.